Hey guys, just a reminder, nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Good morning, guys. Let's see what we have for today. Not much has really happened since Friday, or even since last week. If you remember, last Tuesday I was already talking about this exact moment we're in now. The main idea back then was simple. If we expect an order block formation in this area, then this week really needs to close green. That would signal strength. At the same time, though, it usually means we could be looking at a more choppy range environment instead of clean directional movement. Looking at what happened since then, price went slightly higher and almost managed to test the daily structure high. However, it still remains within the larger range and is sitting below the key SR level of the higher range. So in reality, nothing new has developed. We are still inside the process of bottom formation. To keep things simple, we already mapped out our important support and resistance levels. On the downside, the main support is defined by the 4-day order block. On the upside, the resistance is marked by that larger SR level we've been watching. These remain unchanged, so the same scenarios still apply. As long as price stays above the 4-day order block, this zone continues to act as support. There's been no acceptance back into the previous range on the downside. Wicks into the area are fine and normal. If it comes down and gives us wicks into our next area of interest, that's exactly where I'd be interested to add to my position. That next area of interest has even more confluence. It includes the high volume node from the price action above 70K, and that level also represents the point of control POC for the entire year of 2025. You can check this by taking the fixed range tool and pulling it from the very start of the year until now. You'll see the POC is exactly there. On top of that, it's aligned with the weekly order block, structural stops, and even our daily cycle timing. As if that wasn't enough, we also have the 5-day 50 EMA cloud sitting there, adding extra weight. And one more tool that I personally use is the super trend indicator. In this case, I focus on the 3-day and 5-day charts. On the 3-day chart, the super trend lines up nicely with this same level. Yes, sometimes we see deviations, and that's where the 5-day chart comes in. In this bull run, the 5-day has often tagged the extreme downside moves, marking bottoms. On the weekly chart, the super trend only had one touch so far, but right now it's aligning with the low I've been mentioning for a long time, the one that also had strong statistics behind it. This is why I see this area as extra confluence for a potential low. So overall, we have a big cluster of tools and levels all pointing to the same place. That makes it a very strong support area if price were to dip that far. Of course, these are all interesting levels or areas of interest. But everything starts with the zone we're currently in right now. This is my take action area. I already acted here, holding my longs. To the upside, this is now my patience area. I'll wait for profits to play out rather than trying to overtrade. As long as the current level isn't lost, those deeper levels are interesting, but not active targets. The first scenario would only be a wick into the order block and POC without losing the level. Simple as that. Now for the upside, things are more straightforward. What we need is a break above the SR level and the daily swing high. If that happens, the door's open for higher prices. On the downside, the path is more limited. Yet many people still prefer to remain bearish in a market that, on the bigger picture, has been rising steadily. They call bullish traders naive or unrealistic. But history has shown that most of the time, these people end up being front-run on their lower targets, missing the actual move, and then buying back higher, or not buying at all while the market rallies without them. And when the market eventually does pull back, history repeats itself again. Yes, sometimes they get it right, but honestly, I'd call that luck. Most of the time, their calls are consistently wrong, and the few times they are right, they tend to sell the rally way too early. That shows poor planning and a poor perspective on the market. It's usually driven by emotional trading, by fear and FOMO, rather than clear strategy. That's exactly what we want to avoid here. That's also why I share statistics about levels so often. For example, last time I focused on this low and this area. That's why I still talk about it. It would become highly relevant only if the 4-day order block fails. Then it could become a nice opportunity. I won't repeat all the detailed stats here. You can find them in the Discord. Instead, let's take a look at the EMAs on the 3-day chart, which I showed last time. Remember the bearish cross strategy. When the 9 and 21 EMA cross down, the target is typically the 55 EMA. Out of 17 historical examples, price reached the 55 EMA 14 times and failed only 3 times. That's a very solid hit rate. Most of the failures happened in strong uptrends after the cross down, or where only shallow touches occurred. Zooming into our current situation, we can see a cross forming again, with the 55 EMA currently sitting around 107K, give or take. That would suggest another potential low for the current price action. But keep in mind, this EMA rises with every new 3-day close, so it's not a fixed number. Still, it's another strong confluence level. On top of that, in past deviations, price also touched the 5-day EMA, which is currently around 101K. That lines up almost perfectly with the low I've been talking about for weeks, and all the other confluences we've highlighted. Same principle applies. The EMA level isn't fixed, it rises with time, and the 5-day hasn't crossed yet. But it's still a very useful example of how we can build targets logically with indicators and statistics, rather than just throwing random numbers around. Now, one last thing I want to touch on, something I've followed for a long time. FOMC. What I do here is observe the market behavior before the event. To keep it simple, on average, we've seen significant reactions about 10 days before the FOMC meeting, or exactly on the date itself. The next FOMC is on September 18th. So, my plan is to simply observe the direction we're moving into that date and then look for the opposite move. Of course, this is based on averages, and sometimes it can take longer, meaning the reaction happens right at the event. Very often, the move before FOMC is just a pricing in move. That's why I've already taken action here inside this area, as I explained earlier. FOMC could mark a turning point, either another low or a break above this key level followed by a correction. Then I'll assess the nature of the move, was it impulsive or not, and make my next decision based on that. The important thing to keep in mind is that this is just an average. It gives you a time window to watch structure and levels, not a guarantee. In the bigger picture, it's very clear. Before the event, markets often price in a move and then reverse. So that's the HTF view. Now let's move to the local levels. Mark out the averages and see if we have a day trade setup for today. Well, locally we have a few ranges developing here, and to be honest with you, I don't really plan on trading much inside this range anymore. I already have my bigger trades running from here, yes, but for day trades, I'd rather focus on the extremes. On the downside, the most obvious level is simply the overall low. That can provide a day trade setup, and as I've explained, it's also a level where I'd look to add to my position. Locally, we also have some poor lows sitting there, and it depends what plays out first. If the lows get taken first, that could provide a scalp or even a day trade. Sadly, that's not aligned with today's average loss level, but still, one can watch for some kind of reaction there. Worst case, it's just the average loss level giving a scalp back up toward the upper part of the range or the 4-day order block. The runner from such a setup would target the daily swing high. That's important because with Friday's move, Bitcoin created an equal high at that level, which makes it a magnet and a target. And what's nice is that this equal high also aligns with today's average gain level. I think I already showed this potential scalp setup last week. Anyway, that would be the other area of interest for people looking for short scalps or day trades, depending on their own plan. The key idea is simple: the average gain plus an SFP of the daily swing high. For me personally, I'll also observe what happens after that. Because once price pushes into the upper part of the SR level, it means we have acceptance back inside, until proven otherwise. So if I take a scalp there, I'll also look to secure some profits, because these levels can hold on the retest. From there, we'll need to see if price ranges in this area for a few days and holds, or if it eventually loses it in which case the weekly open becomes the next target, along with those poor lows at the bottom. So I'd call that the simple plan for today, and potentially for the whole week, depending on how much time price spends here. Of course, the other scenarios I already explained still stand. If we see the overall low, I'll add to my position, and if we see a break above the current SR, then I'll look at where to take some profits on one of my longs. And if something changes, I'll update you as always. Okay, I hope everything is clear for today. By the way, if you want to join the Patreon, you're very welcome there. I'll answer all your questions directly, give more examples and updates on how I trade, and very soon, the first educational video will be released. It will include one of my strategies, statistics, and more, so it should be very useful for anyone who wants to learn exactly what I'm doing, or even just for those who are mainly looking for day trades. With that said, I wish you all a good day, and see you in the next one.